Let's go over. Time is 9:08, so we're in pre-market. Let's check SPY out here. See what SPY's doing pre-market. I'm going to go out on the limb. You know what? First, let's take a peek. Let's see how it closed. And so if I'm going to go and try to make a little prediction on what SPY is going to do on pre-market, I have not even looked at it. So I'm going to, first I'm going to go to the 90-minute. Take a quick peek, see if there was any divergences, what the fishers are doing. The predictor was on its way up. Going to depend on what this first 90-minute candle of volatility is going to do. Let's see, the 45-minute. There was some hidden bear, obviously. They shot the returns oscillator down here, right to the zero mean. Entropy kind of just going sideways right here. Volatility, same read on the 45 as it was on the 90. And the Z-score is hanging around these lower confidence intervals. I'm not seeing any div. No divs. No divs, no divs. Let me see here. Yeah. That was too strong of a move. It's not going to put a set on that returns oscillator. So, all right, 15-minute. Yeah, we've got some hidden bull in the 15 setting up. Entropy is pretty random, flashing when SPY was crashing. So that's good. I would imagine this thing is just sideways pre-market or up a little bit. Yeah, it's up a little bit. It's up a little bit. Beautiful. This on SPY. Yep, just a tad. Just a tad. Up like 40 cents. All right. And you can see what happened yesterday. All right. Here's the top of SPY's weekly range. Got a little bit more of a test yesterday. Got a little closer than the first day of the week. With that wick, you can see it bounced right on the S2 of the daily price action volatility range. Shot up, got a wick into that tight daily, right? Did it have to go back up and test this? Didn't have to, right? Pre-market, just dropped right through it. So it was tested. But we did have a rejection there. Found support right here on this monthly R1. It's a red cross line. The blue cross line was yesterday's. That was SPY's first standard deviation, normal distribution to the downside. So it makes sense here. It's popping a little bit. Pre-market. Let me look. That was the 4-hour. See this daily. All the fishers are turning down. All the fishers are turning down. And we did. We had a lot of on the daily. I mean, recently, just a, you know what? I mean, there was a little bear div, right? But you can see how it plays out, right? From this point right here. This was the first, right? Lower high on the returns oscillator. Quick little pullback, right? Quick little pullback off that bear div. Then what does it do? It goes to the top side again, Creates another higher high on price action, another lower high on the returns oscillator. Goes sideways, even got a couple day pullback here. But same thing setting up now. Haven't had that much of a pullback though. So I'm going to have to see how this plays out, especially these next couple days. Overall, I like the way traditional markets are looking when it comes to entropy and volatility. There's there is some bear div on the daily Z-score. And the DLP, not too significant, but it is there. Is what I'll be looking for. So if I'm getting divergence on the Z-score and the DLP, right? These are all indicators that are based on the returns. If I'm not seeing the divergence on the returns oscillator, if I'm not seeing the divergence on the Fisher, right? That's telling me right there, it's not as strong as I would like to see, and that's why we're not seeing as big of a pullback, to be honest. Because the returns oscillator is going to be the most important indicator I'm looking for divergence on, because it's just pure. It's just reading the returns, bam. There's other stuff that goes into the, obviously, Z-score, DLP. So yeah, I'll be keeping an eye on this. Today and tomorrow will be interesting. Yes, it will. Now we see what SPY's doing. And it's starting to, it's creeping a little bit up pre-market. Yes, it is. And what's NAS? What are the E-minis doing? 16 points. Dixie, what are you doing? Going up a little bit. Oil going up a little bit. VIX, I want to see when this market opens what happens with VIX. Because it literally has been just hanging around that 20 point mark. And if you don't know what VIX is the volatility of the S&P. And when that VIX rises, price action going down every time. It's a no-brainer. It's the way that works. When the VIX is high, the price is dropping. When VIX starts dropping, price starts rising. A lot of people out there watch the VIX. There's Yasha. Now we made one change to those settings just to let him read all the chat history in the stream chat. I changed that. And let him speak too. Like we just had XMARS. XMARS just spoke a little bit, which is fine. If somebody causes any issues, I mean, hello. We'll just kick them. Bye-bye. You get one chance. Don't be stupid. We're giving everybody an opportunity to just jump on board with all this. Right? I mean, there was really only main reason why we had a paywall to begin with. That was because there's a lot of trolls out there. We have a lot of enemies because of what we're doing. Right? We go against the grain. We tell people the truth about these markets. A lot of people don't like that. Right? A lot of people don't like that. Why? Well, there's people out there that make a living off of people that don't understand how to trade these markets. They don't want people telling these people the truth. They really don't. Hey, I don't blame them. If I was in their shoes, I'd probably be mad at somebody like me too for explaining all this to people. Now, as complicated as it may seem, if you just give it some time and you continue to work on stuff, and that's why we're opening up this Discord, so people can have time. And if they just continue to look at this, and with the pro chart, right, the free indicators that we're going to give to people, it's the same pro chart, nothing's changing, but that's the basis to start to learn about divergence using that ALR and price action, right? And then obviously the volatility and the correlation. So very important things to learn first. But you watch that for a while, and you're able to read these chats. At some point, hey, maybe there's an interest, right? Maybe there's an interest in our full package of indicators, which is pretty damn extensive. What you're getting for what we charge is like, it's the best deal going. There's people out there selling. There's one specific indicator. It's like $300 a month that is literally a worthless piece of shit, right? It's a multi-time frame stochastic indicator. They tries to pawn off on it's some crazy well, not anymore. He knows it's a piece of crap, but Yeah, that's all it is. Yeah, give me a
Oh,
multi-time frame stochastic indicator, please. That'll work. That's going to give me some great signals. That's what everybody's looking for, right? Signals. That's why a Discord like this is, we do what we do. We bring people on as they come. We're not beating the drum, right? It doesn't matter to us. If people don't come over here, if they don't want to learn about the returns, especially the distribution of returns, volatility, entropy, statistics, the VEPS, it doesn't matter. There's always going to be an endless supply of liquidity on the other side of our trades because we are following the returns. People using traditional TA aren't. They're just looking at price action. They're trying to figure out price action by looking at looking at indicators that are based on that price action. Well, that's not price action. Isn't when price action moves around, it's not because of price action. That's what people don't understand. So they're looking at indicators like the relative strength index or the stochastic, right? MACD. What's MACD? Right? It's moving averages. What's the Ichimoku cloud or however you pronounce that thing? It's moving averages. So yeah, so we do, right? We start teaching people why is the market moving like this? The bottom line, it's volatility, not volume. So people don't understand. People that are out there using volume to trade, you don't have to add, the answer is clear on why you're not a profitable trader. If you're looking at volume, what's creating, I mean, come on now. But volatility creates all the moves in these markets, right? When that volatility starts expanding, all you need to know, how is that volatility correlated? Was there any divergence when this volatility started to expand? Like right here, let's see. You can see we had a little expansion negatively correlated right here. All right, this is the 525. It was negatively correlated. Right when volatility went to zeros, it was already positively correlated. Heading to the top side too. All you need now is some expansion. So I'm looking over here. Let's see, there was no divergence. There was no divergence on any indicators. So yeah, that was just boom, right? Buyers came in. It wasn't because of an imbalance, right? When there's an imbalance in the buy and sell pressure, that's when you get some nice divergent moves. Okay, let's see here. Let me throw this back on BTC. Although SPY, 427. Yeah, it's just hanging right around that same area. That's good. We'll check back in 10 minutes and see what happens. So Bitcoin. What is the old Bitcoin up to? You know what? I never looked at this daily chart. That's what I love about Z-score. So the Z-score just dropping, right? Every one of these points, right? From all of this, there was bear div, right? There was bear div on the Z-score. Well, now that Z-score is down into the lower confidence intervals. Did we get that big of a drop? This is on the daily. This is actually, I mean, this is showing the strength of the buyers right now, in my opinion. Because that Z-score dropped down to the 95% confidence interval. Yep, it's right there right now. And everybody knows what happens, right? This is the Z-score of log returns, though, right? That's what we've done with this indicator. Every indicator, right? You can turn off log returns. Obviously, you don't want to, though. You want to know the Z-score of the log returns, right? This has zero to do with price action. This is where people are missing the whole point. These indicators got zero to do with price action. So now do you understand why this is the only divergence to look at? Right? You're looking at two different things. That there's divergence is allowable, right? When you're looking at price action movement and the strength of that price action, and you're gauging divergence off that, think about what you're doing, right? That's like taking a hammer and just hitting yourself in the forehead. There is divergence here. Bam. There is divergence here. Bam. Divergence of what? Price action and the strength of itself? Come on, man. Come on. No, returns. Returns. That's the divergence between returns and that price action. And then that divergence is literally telling you the return on your investment's diminishing. How about take that profit? Be like, okay. And we have all the other tools too, whether it be variance topping out with an outlier, right? All the fishers are flipping. The one thing I am looking at is this DLP. And on the daily, the DLP dropped to the downside again. So this will be interesting to see if this market does pop out of here. We're gonna have to see what happens with SPY today. These traditional markets, for sure. I got crazy dogs barking. All right. Now the nights are getting cooler. The mice are everywhere. I'm battling the mice, ladies and gentlemen. Got 2 kills last night. Poor little devils. All right. Volatility is pretty low on the 4-hour. It's negatively correlated right now. Right? This contraction right here. When the correlation broke negative and the volatility contracted, price action just walked up. It's not like this is in a book somewhere, right? We wrote the book. We wrote the book. That's what people need to understand. Nobody has been doing this with correlation. Zippo. That's why a lot of people don't get it, because they can't go research it anywhere. All right. The book that was written by Alpha Trading about correlating non-directional indicators to price action. And when you do that, they become 100% directional. There's no argument. People can try, but yeah, good luck, because the proof is in the pudding. The proof is in the pudding. There's certain scenarios that happen with volatility and correlation, and when one of those happens, price action acts accordingly. There's not one example that it does not do exactly what that volatility is saying. That's why we put a lot of weight on it and tell people to learn it first, right? It's part of the free chart. Part of that free chart. Pop it up. Why not? Where you at, Pro Chart? There you are. This is the free chart you will be getting, right? This is all the same. These are the same indicators, just different lengths, right? This is a 525 length, a 981, and a 2400. The 15-minute volatility on the highest length has been flashing. It is flat, right? The 981 is just starting to expand, actually flat. So we're going to have to see how this works. But here it is right here. So yeah, these last 2 candles, right? We got contracting volatility, significantly positively correlated. So this is going to teach you about the correlation in the volatility. All right, we highly recommend just use one length. Use a low length. Start to see the moves. Right, when you contract and expand, whether it's positively or negatively correlated. That being said, it doesn't have to be on either side. It all has to do with slope, the direction, right? Big time. All right, let's see here. And then you got the ALR over here. This is going to help with divergence, right? This is going to help with divergence between price action and returns. Go to 15-minute. On the old 90 here. Yeah, on the 90. Yep, DLP is very clean. That's what you want to look for too. That's what you want to look for too. Let's see if we can get any Yeah, I mean, so this whole move, look how powerful that ALR candle was. I mean, God, that's like 5 standard deviations probably, 4.5 at least, probably closer to 5 though. And then, right, we get a quick little pullback, but every move, every resulting move to the top side right here, all lower highs, right? Finally gets to the point and then breaks down. Boop, divergence play to the downside. But look what was happening, right? All higher lows on the down move. And then boop, pop to the top side. All right. And look at then from this data set to this data set, more div. Not strong, but it's there. Boom, pullback. So yeah, you just got to and then that was hidden bull that made that pop. Let's see. Boom, no div there though. But you can go through these time frames. You go to a 1 minute and you just start looking at the LR and how the div plays out, you'll see it. You'll see it. It's there. It's there. But this is the free chart that people will be getting when they come into our Discord. Okay? Very powerful. And it's the basis, right? It's the basis. There is a learning curve to this. There is no doubt about it. Learning curve steep. But hey, that's why the Discord's opened up now. Take your time. Watch these streams Monday through Friday, 9 a.m. Eastern Standard Time.
Yeah.
Yeah. We do this for you guys, right? We're not getting paid to do this. People need to don't get this twisted. We don't have a motive, right?
Right.
We're not anything,
exchange.
yeah. If anything, our motive is we don't beat the drum. We don't try to search out people that want to learn this stuff because until you do, your liquidity on the other side of our trade. So really, we don't care. So understand why we do this for the few that do get it, for the few that do want to attempt to learn how to trade this way, right? Why do we do this? Because the high frequency trading firms, all the liquidity that's moving these markets around is happening on the 1 minute chart, hell, the 30-second chart, the 5 minute chart. That's where all these algorithms are doing their dirty work. And people are just getting eaten alive. If you are trying to trade volatile markets using traditional TA, you are going to get wrecked, right? It's impossible. You have to understand what's going on with the returns. You need to understand where the price action is in the distribution of the returns, and you need to understand about volatility. You need to understand about the divergence between the returns and price action. And this is what we're trying to teach people. So yeah. So now the Discord, right? You've got the public chat. You've got this stream chat. Any new people, you can ask questions. You can speak in the live streams, right? You can ask anything you want about any of this. We are here to answer questions. So right now, what time is it? 9:30. Okay, so we get SPY opening up. Let's check this out real quick. And now is what you're looking at here. If you're new, if you're watching this video on YouTube, or if you're watching it live right now, this is our VRE, right? It's our volatility range estimator. And then I add distribution levels, normal distribution and Laplace distribution. You need to understand where price action is when it comes to these areas. And once you start looking at this indicator, it'll be like, well, I don't know what it is, but there's something to it. Yeah, it's the distribution, right? These algos are running. They're in it. They understand the probabilities. Do you think people building $1 million trading algorithms do not understand this? Of course they do. Of course they understand the math. That's what all this is about. It's nothing more than math. Now you can throw that into the generalities of the world. Everything's just math. There's no doubt about it. creation itself. So when you start to realize the different probabilities within the distribution, whoa, it's going to take a lot of the thinking out of it, right? Let these indicators do the heavy lifting. You know where price action is, right? And so if we go over here and you literally look, right, I've got a projection of the Laplace distribution with the reverse mean of log returns, okay? And so I kind of changed this up. I wanted to see, we went sideways a little bit here, right? We had the one low down about a little under 25K, got a big wick back up. Now, when we started this next drop down to the lows, about 17.5, I started the Laplace distribution projection from here. You can see how the second weekly candle dropped down to this level. So what is this line down here? This is the 99.7% Laplace distribution range. That means there is a 99.7% chance this weekly candle was not going to close below this area. And in fact, not only did you hit the projection 99.7, you hit the current candle. That's what these dots are. So on this current weekly candle, it got past the 99.7 Laplace. Those probabilities are literally telling you this is going to pull back up, right? And it did. That is the third standard deviation, that little blue dot right there. That was the third standard deviation, normal distribution. So the probabilities work the same. They're just different distribution models. So a third standard deviation is a 99.7 Laplace distribution range. It pulled right back up inside that 99.7, right? There was only a 0.03% chance that candle would close below 19.9, approximately. And so this line right here, that's the 95.4 Laplace distribution range. So not only did you get a bounce off the 99.7, going into the future during this projection, there was a 95.4% chance this price action would make its way back up inside that range. And then this is the 68.3% Laplace distribution range. So once you retake that level, there's a 68.3% chance BTC's data set would make its way back up to this level. 2 weeks in a row, we got wicks right to it. What else is going on right here that we've been talking about for 9 weeks? Mean reversion. That's what this line is. That is the reverse mean of log returns. Have the returns mean reverted after rejecting to the dollar off of it here. Look what happened last time we rejected off the reverse mean to the downside. Right? This was important. We opened up the week in this little trough right here. Now it's dropped down below the reverse mean. If price action rejects here, we're probably going to see new lows. If it rejects here, if it can find some stability, close a weekly candle on the top side of this reverse mean, could be a different story. Could be a different story. That's the thing. We haven't closed the candle above it. We opened a candle above it, but as everybody knows that understands the way we trade, openings don't matter. It's worthless info. Great. Hey, we opened up a candle above the reverse mean of log returns. We're going to the moon. No. I've been talking for weeks. I want to see what happens when price action gets here. Is the price action going to reject? Or is it going to find support above and close a weekly candle above here? I'm telling you. Now look, if it doesn't this week, I'm telling you, it's going to take a lot of work. This would be a good point. Unless we're going to go sideways and break up somewhere around here, right? But I've been talking about we could be right around this 20K area through the end of the year easily, just driving traders crazy. Getting people in bad positions. And we know how Bitcoin does it, right? All of a sudden, wham, it just takes off or dumps. We see these things coming, right? When everybody else is they're in their echo chambers, wherever that echo chamber's at. Most traders are in one. We're not an echo chamber. Everything's based on math, right? It's not like we've got 10 different people looking at 10 different charts, all kinds of different indicators. Most of the time people saying, well, my way's the best. No, my way's the best. Math is the best. Everybody that's at Alpha Trading agrees with that. So over here, everybody's working on the same thing. We're all learning about volatility, entropy, statistics, volatility, all this stuff. Good. Very important to learn. Not a lot of people make it. All right, they give up. They give up. Probably most of the time right before maybe they're going to get a little insight into it all because they've been paying attention. But then it's just like, yeah, it's moving too slow. And typical of a human, they're just going to jump ship, go to something else. Oh, hey, if that's the case, that's fine. You'll never hear us bashing people that come in and leave, right? Hey, you came, you saw, maybe you didn't understand. That's fine. You know we're here now. It usually takes people that trade traditional TA and that are in that echo chamber with all the YouTube jimmies out there, right? All these crazy thumbnails on YouTube and these people telling you where they think the market's going and what's going on. Oh, they got to throw the news in. Oh, look what's happening with the news. Do we care about news? No. Show me the volatility charts. Show me the VEPS. I'll tell you what the news is tomorrow. That's the way this works. This is where people are getting manipulated, right? News, even in trading. That's what news is for. If you don't understand that, if maybe you're in the younger generation, you grew up, you're already inside the bubble, you don't know where we've come from. I grew up in the freaking 70s. So it's like, we had a lot more truth back then. Now it's just all bullshit across the board. They use news to manipulate traders. Okay? Any move in history in these charts, right? The VEPS will show you first. We'll see the market changing, right? Most people think, oh, the news came out. Oh, sellers are scared. Now they're going to start selling. No. Trust me, these algos are way ahead of retail traders. Way ahead of them. Do you think these high frequency trading firms are setting up their bots because of news? No, they don't give a shit either. Why? They're trading the 30-second chart. They're trading the 1-minute chart. They're trading the 5-minute charts. Do you think economic news affects those time frame trades? No. Do you think these algos give a shit whether the price is going up or the price is going down? No. They're the ones that are moving the market. They know what's about to happen. So when you get a set of indicators like we've put together over here, it gives you insight into what the returns are doing. Usually when people are selling bottoms and buying tops, we're doing the exact opposite because we know where price action is in the distribution. And people don't know how to take profit, right? This is something either it's going to be learned the hard way about taking profit, or it's going to be taught. That's what we try to do here. We try to teach people how to take profit because it's one of the hardest things to do in the markets because of greed. Everybody wants more. Everybody wants more. So down here, when people are selling the bottom of the distribution down here, we're not. Right? We're not. We know the probabilities. We know the math. We know there was a 0.03% chance for this weekly candle to close below the outside of this distribution. So we're in a very important area right now, right? And it's like this projection, this reverse mean of log returns, this is all based on the returns. Has nothing to do with price action, but price action follows the returns. So when you see the reverse mean up here and you know the returns were way below that mean, the first thing that's going to pop in your head, mean reversion happens over and over and over and over again. If this price action was way far above the mean, am I comfortable? Am I comfortable up here? If price action was up here, let's just go as strictly investment, right? I'm not trading. I'm looking to invest in something. Am I going to invest in the project up here? Hell no. Why? Because I know the returns are going to mean revert at some point. That's $20,000. If that price action was up here, so am I going to get in at 60K, or am I going to be like, returns are way above the reverse mean? That is not sustainable. The returns will mean revert. Then you want to make an investment. First, you're going to want to see, okay, hey, is the data set of this specific project, is it going to drop below the mean? Then I'm even waiting longer. Because hell, we could get a big drop below the mean. And then you get a down move like this, right? Say this is it right here. You're looking for an investment. We're going up. I'm waiting to see what happens when this data set gets to the reverse mean of log returns on the weekly. Are we going to close a weekly candle above and go to the top side? Right? Or are we going to reject? And on this rejection, I'm waiting. I'm waiting. And then you throw these distribution levels or these projections, and you see we're at the bottom of the distribution. That this is where you buy. Right? You don't buy up here. You don't buy when the data set is getting ready to reject off the reverse mean. Now, you don't know it was going to reject, but it sure did. Big time. Eerily familiar what we're doing right now. Mark my words. This weekly candle does not close up here around like 24.5, 25K, right in that area. We do not close above this reverse mean of log returns. There's a higher probability that we either sweep the lows or get some new lows. And if it's another sustained move, let's say we get 3 weekly candles all down. I'm going to start a projection over here, right? I'm going to start a projection over here. I mean, you could put one out here now and just see the levels, but you don't have to. We have the current candle, right? We have all these levels of the current candle right now. That's why you really don't need to put a projection. It's just going to overlay all those areas. So it's all good. That's why we like both. We like the current candle probability levels. We like the PB2s. They are our projection bosses. And they are very powerful indicators. Just for that simple fact that it really helps you understand where the price action is in the distribution and all the mathematical probabilities that go along with it. When you understand, so if you're down at the 99.7% Laplace distribution range, is it a good idea to short that? Understanding that you have a 0.03% chance to win the trade? Hell no, you're not. Right? Hell no, you're not. The probabilities are to long it. And anybody that likes to get in long-term trades, and if they were using this model and they saw the support of the bottom of that distribution, and they're just like, I'm going to get in long. Did it pay off for them? Right? And if they had the reverse mean, have they taken profit? They should have. I mean, it's a couple month trade. You get up here, you sent 2 wicks right into the bottom side of the 90 or of the 68.3 Laplace. Time to take profit. Was it a good profit? I don't know. Say you got in at 18K. I don't know, 6K profit. What if you were 3, 4, 5 Bitcoins long? Add it up. Add it up. I'm talking 30K. So yeah, this is why we do what we do. In our prediction model, yes, we have a predictor that our math guys have set up. It's very powerful. It is still to the top side. As entropy is going back into randomness, first you need to understand what entropy is. Entropy is literally telling you whether the market is trending or whether it is random price action. This is what people trading traditional TA don't understand. Oh, well,
I use these indicators. I've got a trend machine set up with moving averages. They're going to tell me what's going on with price action. Oh boy.
Well,
Silly, silly, silly. Entropy. Understand it. Read about it. If you don't know what entropy is, go look at the definition. Right? It's not like trading created entropy. Hello. All of a sudden, one day, somebody was just like, hey, we should throw entropy on these markets. Let's see if it tells us when price action is random and see if it tells us when it's in trend. That's what entropy does, right? Sorts out randomness. Is this event random, right? Or is there sustenance to this? Is it trending? And that's what this indicator does for us. It's very powerful. Look at the strong trend on the way to the first 65K high, right? Look at that. Powerful moves. Powerful moves. And we were talking over here that entropy hadn't trended since that time, right? This is low entropy. Had a little bit of blue, had a little trend here on the last couple candles of this move down here. A little bit here, but nothing like we had to the top side. So I want to see on this weekly, is this entropy gonna flash like all the little white flashes right here when it's totally random? And if that predictor stays to the top side and we start to go back in the trend, get ready. Get ready. Bitcoin's probably going to move into new all-time highs. Maybe take over that 100K level. That everybody, including myself, I'm looking at the probabilities on those moves, right? But you throw a long-term projection on some of these moves, you know, I might be saying, oh, please, let's go to 100K. So I was going to sell a shitload of Bitcoin. But didn't happen. Why? All these moves are so outside the distribution, right? So outside of it that you know this is coming. You know this is coming. This pullback. Let me see here. Let's go back there, just for shits and giggles. Right there. 98 bars. So this baby on a 98. Okay. So here's where we're at. Blow this baby up. Down a little bit so we can get everything in here. Okay. After we first moved, this got up to about 12K, I think. Yeah, 12. Then we had this little pullback. And again, look at price right here. Break through the reverse mean of log returns. Find support here. Go a little sideways. Get a little pump. Hey, mean reversion happens. Look where the beginning of the move down there around 10K happened. What'd it do? Look at these wicks. Look at these wicks. Bounced right off the reverse mean of log returns and went on a mission all the way to 65K. But what happened? Look, it's outside of the distribution. You need to realize this is why we use Laplace distribution to begin with, because BTC is a volatile monster. There's nothing that will ever be like this. It's just the way BTC is. So, and that's why these high frequency trading firms, if people don't think these firms aren't trading these markets, you're very confused. This is what they live for. When YouTube Jimmy's telling retail traders, oh, be careful, you don't want to trade during volatile periods. It's too volatile. We're going, we live for volatility, for God's sakes. So you continue to tell people that, we're fine. We're going to recognize what these algorithms are doing. We're jumping on their coattails and we're cleaning up the crumbs of these beasts. These algos are literally slaying these markets. Right? There's a reason why the rich get richer and the poor get poorer. Right? The poor is think about it. The poor are using traditional TA. The algos are using the distribution, the probabilities, right? They understand when the market's trending. They're creating the damn trend. But there was a 0.03% chance that this price action not only would go out here, but stay out there. Eventually, mean reversion happens. Right? And then price action goes to the bottom side of the reverse mean. Here's the top side of the 95.4. It didn't even get down to it like it did right here. right? People are like, where do these wicks go? And people are drawing trend lines. I can show you so many examples of people drawing trend lines where there's literally price action going. You like those little sound effects? I don't even have a soundboard. So price action's just nailing these levels. Pullback, boom, pullback, boom. And people are putting trend lines on it and not understanding, right? So what are they looking for? Say you got price action like 5 times and these people got a trend line. They're literally waiting for a candle to close above the trend line. Hey, breakout! Hey, dumbass. That trend line's at a 99.7% level. You have a 0.03% chance of that breakout happening to the top side. And a 99.7% chance that it's going to reject. And that'll be a little fake out if it does close above it. Right? And so you pull back here and you find support on the top side of the 95.4. But then what happened? Rejected off the reverse mean. New lows. Now what's happening? Mean reversion. Important time. Important time. It did find, off of this, sent from 10K to all these new highs, we're still above the 68.3. Right? I'm telling you right now, if this price action over these several following weeks right here would have closed inside this 68.3, I'm telling you right now, you'd probably see about a $10,000 Bitcoin right now. Probably would have had full mean reversion, which is this white line right here, 10.8. Because that's what this projection model's telling you too, right? Returns way outside the distribution. Price action followed. Now we're back inside. 95.4, it didn't end up holding, right? Busted down through there. Found support above the 68.3. It would have been a whole different story. You get down in this range. I'm telling you, you get stuck down in here and just go sideways. The fact we bounced before we got to the 68.3, now we mean reverted, this is important right here. Because you can bet a bottom dollar that if this rejects here, there could be full mean reversion. We could see new lows. We could see a 10K Bitcoin or something. God, please, crypto gods. I mean, whoever thought they'd ever be able to get Bitcoin at 10K again, if it does happen. That's why when you got all these traders out here crying about the markets, I'm begging. Number one, I'm going to trade it all the way down. And I'm close to getting back in the saddle, right? Haven't traded in a while. I needed a break. Everybody does. Shit can be mentally exhausting. I'd rather go chop wood for 8 hours sometimes. I'd rather be physically exhausted than mentally exhausted. Because when I'm mentally exhausted, I don't sleep well. That's probably across the board of everybody. Got all that that overlying freaking anxiety just coming down on you. It's not easy to sleep. So they're right there. The story I just told, right? That should open up some eyes a little bit to, well, I don't quite understand about all this, but what I'm seeing, I don't know what this line is, right? But some things are making sense here. I don't fully understand mean reversion. These are all things you can look up, right? I mean, we're very glad we opened up the Discord. Right? We want to get people watching these streams. We want to give people the opportunity to see what we do. There's only one reason why we had a paywall, because there's a lot of haters, a lot of trolls. Now it's been a while. If people come back, they cause trouble, we're just going to kick them. But we figure it's better for the whole, right? There's only going to be a few of those people. But if we can freely let you guys see this info, and you can start studying that free chart and learning about volatility, right? Learning about the laser returns, right? That's your first step. That's your first step on learning about divergence between price action and returns. Now, this free chart's going to come with just one AVP, and one correlation. I've just got 3 set up, right? And depending on what level of TradingView account you have when you do pull up this chart, it's probably not going to let you populate all these unless you have like a pro level. But they're just different length of volatility. This is a 525. This is a 981, and this is a 2400. We use square roots, right? Numbers are big for us at Alpha Trading. And I even in just the number, the philosophy I use is very powerful, and I've always used it, even when I was trading traditional TA, as little as 5 years ago, right? So numbers are big. Mathematics, right? Am I a math major? Hell no. Our coders, they are. They put this stuff together. They're the engineers that create this. We are the pilots, right? We pilot the stealth fighter that they're building. That's all we do. You don't have to fully understand the math. But when we're giving you indicators saying, hey, this is a 68.3% level, this is a 95.4% level, and this is a 99.7% level. It's only math you need to know. You need to know there's a 0.03% chance we get by this area. There's a 4.6% chance we get by this area. And there's a 31.2% chance we get by this area. That's all it is. And the deeper you get into the distribution, the easier it is. The easier it is. And like we're on a 5-minute right here. Let me see something. Let me go back. Get on a 5-minute chart. Let's see. Just for shits and giggles.
Shout out to all the new folks, all the new whelps who are listening in and watching. Learning.
Yes, sir.
By the way, I don't know if we have a free chart per se, but you can just flap those indicators up on a new chart. If you have any questions about it, just ask. We'll help you set up a chart. I don't know how we distribute the free chart, but.
And this is just on a 5-minute chart right here, which you can throw every one of these little moves, and is where you make these projections are at pivots and price, right? Pivots and price. Another word that the terminology is so screwed up in trading. We're here to change shit, right? That's a pivot, right? The average, like the previous day's average price action, literally the volatility of that price action. That's not a pivot. This is a pivot. We're trying to correct this stuff. But you can see even on this move.
Just like support and resistance, there really is no such thing, but we call it that for ease of understanding. What it is just that's where the buys and sells are, and it's based on the volatility, not on the price action. So when you see support and resistance levels in like traditional TA, they're based on price, and it's no statistically valid. It's silly nonsense. But when we talk about what we call support and resistance, it's really just buy levels and sell levels based on the volatility of the price.
Yes, sir. Yes, sir, indeed.
I just want to make that clear for any of the VEPS traders out there or any of the volatility traders out there who would be like, oh, there's no such thing as support and resistance. Yes, explain what that means.
Yeah, and this 5-minute move. I mean, you get 2 5-minute candles right to the edge of the distribution. There was a 0.03% chance that this 5-minute candle was going to close outside here. So what happens? You get a little support on the top side of the 95.4. Dips in a little bit. One more pump. And if I look, I'm probably going to see some bear div. Then what happens? We just start going. This is what usually happens. When you hit a 99.7, a lot of the times you're going to go sideways. You might get some little floats, right? But you're going to go sideways. We got another test right there of the 95.4. There was a 4.6% chance we're not getting back outside that. This is all probabilities. Pullback. Boom. Now, what are we doing? I mean, you're about to have full mean reversion here. And that's on a 5-minute projection. I mean, you can throw any time frame. It doesn't matter. You can be on the 1 minute, right? You can be on the 1 minute chart. So yeah, good stuff. And that's why we love our just regular deviation bands, because it's literally throwing those current candle levels, right? And you will notice a large amount of the time, you're in this range. You're in the 95.4 Laplace, right? Very rarely do you get out here on the 99.7. And then look what happens. Woo, a little pump, and then whoop, dip right back down to the bottom side of the 95.4. So yeah. And I've got this color. Obviously, these candles aren't going to be colored correctly because these are colored for the trend or for the predicting model, right? For the prediction model. So I'm going to have to change that up. But yeah, this is what we wanted to kind of show everybody. And hey, we're here Monday through Friday, 9 a.m. Eastern time. We're here for you guys. It's opened up. If you don't have access to the pro chart, reach out, open a ticket, reach out. We'll get you access to that pro chart. You can ask any questions in the public chat or this stream chat. And by all means, join us, right? Monday through Friday, 9 a.m. Eastern time. And hey, I want to thank anybody new that is watching because of what we've done. It's great. Good to see XMAR's back. And other than that, we'll see you tomorrow morning. See you guys.